Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for a muted start in the holiday shortened week amidst mixed global cues. Gift Nifty at this point of time is signaling a flat start coming in for the last read around that 19,800 mark. Talk about US equities, they've edged lower on Monday with investor taking a pause post-Thanksgiving. Just a bit of reference out there. The holiday shopping season has kicked in the US markets and they've been hearing high as retailers lured bargain hunters with Cyber Monday deals. Talk about all prices on Tuesday. Well, they've snapped a multi-session losing streak. Essentially, these gains do bear in mind the fact that come in ahead of a crucial meeting of OPEC. It is widely expected to deepen and extend cuts to oil production amidst fears of supply being consistently higher than that of demand. We'll talk about Asian equities. They've inched higher as traders brace for inflation data. Talk about FIIs. They've been the net buyers to an extent of 2,625 crore, and DIIs too have been on the buying side ahead to a tune of around 135 odd crore on November 24th. Let's talk about FNOQs, right? How is the trend stacking up there when it comes to the FII data? Well, they've been the net sellers in index futures and also index options. They've been net buyers in stock futures, bank Nifty futures, but they have been net sellers overall in bank Nifty options too. Well, let's talk about the FNO ban. What is new in the ban is BHEL, granules. What still remains in the ban is Balrampur Chini, Hindustan Copper, Indiabull Housing Finance, Z Limited, Hindustan Copper. What comes out of the ban that you need to keep an eye out on is RBL Bank, Manappuram Finance, India Cement and MCX. In terms of option queues, the PCR ratio now stands at 0.99 versus a level of 1.11. Now, the Nifty put call ratio indicates the mood of the equity markets essentially, and the number below 1 essentially suggests that the traders are buying more call rather than puts, which generally indicates an increase in bullish sentiment. But let's discuss the trade setup strategies for the day along with Ruchit Jain, who is the lead research analyst at 5paisa. Morning there, Ruchit.
Hi, very good morning, Nickey.
All right, Ruchit, what are you making of the markets right now? What levels can one look at? 19,800 mark is scalable within this session, or you think probably there's going to be some amount of resistance which is going to be met around that level?
So, Nickey, if you look at last 8 to 10 days, I think markets have seen more of a consolidation phase on the index front, where the intraday dips towards 19,700 are getting bought into. But the index is not able to surpass the 19,850, 870 mark, which was also the high seen in the month of October. So October high was around 19,850 from where we witnessed that 1,000-point decline. And after this recent pullback, again that 19,850, 870 has been acting as a resistance. So the index needs to give a breakout above that level for any continuation of the trended move towards 20,000 and beyond. So as of now, we are still locked within that range where 19,700, 19,630 are the two support levels. But yes, 19,850, 870 needs to be broken for any kind of trended up move. So we are advising our clients to trade as of now with more of a stock-specific approach. Market momentum is not negative. FIs already have short positions. About more than 75% positions are still on the short side. They have not been covering these shorts, so maybe if they will let their positions either expire or some of them will get rolled to the next series since we are into that monthly expiry week now. So on the index front, we expect this range-bound move to continue. For index, one can look for buying opportunities above 19,870. Until then, it's better to take a stock-specific approach and trade with a positive bias.
Right, that's the word coming in. It's an FNO expiry week indeed, and also at least the pre-open start is indicating around that 19,800 mark. 19,850 mark is what we're looking at, essentially where the markets could be a little more in the bullish undertone. But let's talk about the mid-cap performance. The last 15 days have been exceptionally good, Ruchit, when it comes to the mid-cap performance per se. Do you think a bit of caution is warranted around that index level? And if yes, any specific counters that one can be looking at?
Definitely the momentum readings are a bit overbought, but there are no signs of reversal of the trend. And we have normally seen that whenever there is a very strong trended up move, then the uptrend could continue even in overbought zone for a particular period of time. So I think one needs to be very selective in the mid cap space. Yes, one should manage proper risk management. When looking for trading in the mid cap and the small cap names. There are two names which are on our buy list amongst the mid cap space. Which one can look for short term trading. One is Hitachi Energy India, which is also known as Power India. So basically, this is one stock where the stock is trading around its all time highs. It is on the verge of a breakout from an inverted head and shoulders continuation pattern. So we expect a good momentum over there. So one can look for buying opportunities in Hitachi Energy with stop below 4,660 for short-term targets around 5,200. And Midani is the second stock where we are recommending to go long from the mid-cap basket. So now again, another PSU name, PSU basket has been doing quite well of late. The corrections are getting bought into. This stock too has corrected recently and is trading near its important medium-term support. So the risk-reward ratio is quite favorable for a pullback move, at least from here on. Midani can be bought with stop loss below 369 for targets around 388.
All right, Ruchit, we're just going to be addressing in the markets open and just going to come back to you on Bank Nifty levels and the suggestion that you have there on. Of course, Nifty 50, it is a good start coming in for the markets. Let's just stay in line with what we were estimating for that matter. 19,800 mark, levels to an extent of 0.1% thereabouts. It is a good start. 19,800 mark has been scaled in early deals. Let's talk about the mid-cap index and then move on to Bank Nifty, of course. Bank Nifty also is in line with what Nifty is doing typically. It is 0.1% of gains clocked in for that one. Now, let's talk about mid-cap and the small-cap index. The mid-cap index has been closing higher for almost 15 days in a row, and that is a record high of sorts. The new highs in mid-cap index over the last few days has not been typically confirmed by the small-cap index. If you look at the small-cap index, so this looks like a case for a double top in Nifty mid-cap index, and small caps have stopped making in that higher highs. But in today's session, look at the gains coming in for both of them. Small cap index is a bit of outperformance there, but overall there seems to be a double top or a bearish reversal pattern which is forming in for the broader index. Let's talk about the IT index and the sectoral indices overall. IT seems to be, it's a flat start coming in for that one with a bit of negative bias, of course. We're going to look into the data enough and more through the course of the day. Pharma has a flat start with a bit of positive bias. Let's just say less than 0.1% there. And FMCG too, a flat start coming in for those one as well. Let's talk about PSU banks and just to see along with auto index, because both Maruti Suzuki and Tata Motors intend to go for a price hike starting Jan. While metal index seems to be outperforming. That's the one that needs to be watched out for. PSU bank also seems to be in a good shape in the early morning. Let's talk about auto index. That's the one that we need to watch out for. Flat start with a bit of positive bias out there. So let's look into top gainers and the top losers of the day just to see where the momentum is holding up right now. Tata Motors and Maruti Suzuki essentially need to be also watched out for. But Adani Enterprises, BPCL, Adani Ports, these are some of the top gainers that we have on the list for you. And apart from that, Power Grid, Coal India and Eicher Motors. These are some of the other top gainers that we have. Let's talk about the top losers in that case, just to see where a bit of drubbing has come in from. M&M, ICICI Bank and Apollo Hospital. These are some of the top losers. Reliance, Cipla and Divi's Lab. A bit of drag coming in from the index heavyweight Reliance per se. But let's get going to, address in some of the stocks like Maruti Suzuki, Tata Motors, Paytm, DLF and Raymond before we go back to Ruchit and check with him what does he make out of the start at least coming in for Bank Nifty. But Maruti Suzuki first. Stocks and news where the company is expected to hike in prices of its car in Jan 2024 across model. The hike is to increase cost pressure driven by overall inflation and increased commodity prices. In terms of Tata Motors too, the company is considering increasing in the prices of its passenger vehicle and electric vehicles across ranges in Jan. It's not specified in the quantum of the proposed hike, but of course both these counters in early deals at least have mustered in gains to an extent of 0.25%. Paytm is another one that you need to watch out for, where Warren Buffett investment firm BH International Holding has completely exited in. the stock. It was holding in approximately 2.46, which has been sold at a price of around 877 per share. And overall, the deal is valued around that 1,370 odd crore. But foreign investors such as Copthall Mauritius Investment and Gazilo Master Funds are some of the buyers on the other side of it. DLF, where the ED on November 25th has searched in the Gurugram premises, part of the money laundering investigation against the real estate firm Supertech and its promoter. ED has recovered in some of the documents during the search, and the action is linked to the investigation against Supertech. Well, DLF right now, a bit of losses coming for that one, but remain to be capped. Well, also coming in, news coming in from Raymond, but I'm going to address that in just a jiffy. Go back to Ruchit in that case and check with him. What does he make out of this start? Of course, and Bank Nifty also seems to be doing well in trade. Any particular stock like Maruti Suzuki or Tata Motors, anything from the auto space that you like at this point of time?
So to start for the markets, again looks on the positive side only. But as we have discussed, the 9850 is the important hurdle which needs to be surpassed. So I think that would be the level that we would watch out for, whether it gets crossed today, tomorrow, or maybe since it's an expiry week, so some directional move could be expected. The overall auto space, if we come on, then the overall auto index looks quite positive. The high top, high bottom structure definitely still they're getting continued over there. For Maruti, I would wait for a breakout about 10,620. That's where the immediate resistance is placed. Today, in case if we get a breakout about 10,620, then one can look for buying opportunities in Maruti. Similarly, in Tata Motors also, technical breakout is about 688, which is the recent consolidation high. So once we see a breakout above 688, then I would tend to advise going long in the stock. So what we have seen in last one and a half week, more outperformance is coming from the two-wheeler space. Stocks such as Bajaj Auto, Hero MotoCorp, TVS Motors, they all have been showing a relative outperformance within the entire auto basket. So that's where I think the outperformance would continue going ahead also.
Sure. Ruchit, I also want to chat with you about Paytm. The stock has been down in today's session, also no exception there. Since Warren Buffett has exited, of course, SoftBank has also been trimming in stake. The numbers, there is a trimmed ownership pattern. The company has narrowed its losses in Q2. But what are the charts indicating at this point of time?
So on charts, it doesn't seem that we would see significant price-wise correction just because of that exit. Because today also, what we can see that the stock has not reacted much negative to that news flows. And also, the 100-day exponential moving average has been acting as a good support technically off late whenever there have been small corrections. So that moving average supports, it's right now around 850 to 880 range only. So we don't expect any significant down move. 850 to 880 range should be a good support for this stock.
Right. Last question that we have for you in that case is, of course, got to do with Honasa Consumer. The stock, typically Jefferies has added that in the portfolio and replacing in Marico. How do the charts, are they looking attractive at this point of time? It's gained in quite a lot from the listing, around 12-13% from thereabouts from the listing price. Any more gains coming in for this one?
It is frankly very difficult to take any technical view on this because it's a recent listed company and not much historical data there.
All right, Ruchit, we're just going to leave it at that. Thank you so much for taking out the time and having a conversation with us this morning. All right, let's quickly now navigate our conversation to the fundamental side of the story. Amit Gupta, Senior Vice President and Fund Manager at ICICI Securities, joins us. Morning there, Amit.
Yeah, hi.
Start off with your assessment of, the new age companies, something in the likes of Paytm, of course, where we're seeing exits coming in from investors like Warren and, of course, SoftBank. What do you make out of it? And on the other side, you have Honasa Consumer, where Jefferies has replaced in Marico and put in that counter. Within the space, what do you really like and what do you think about the new age companies at this time?
So I think one positive is that they are definitely trying to come in profits because when they were listed, actually, if you see just 1 or 2 years before, so then they were in deep losses. And from there, some of the companies, for example, Zomato, so they have done really good actually from their operating leverage perspective. And finally, they are coming into profits. Operating profits are coming positive. I think this is something that the market is liking. And because the FII flows right now, are broadly, at a decadal low. I think whenever these flows are going to happen, going forward, you will see a good influx of money moving into one or two companies out of this bucket. If you look at Paytm, I think they entered into the lending business also. And lending business right now is very competitive because one or two new players are coming into this. And we have to see that how this canvas is going to be going forward. You're already seeing that the banking stocks are not performing for the last 1 year now. So their NIMs, are getting hit. And we have seen the cost of funding actually is increasing, particularly for NBFCs now, because the RBI also has increased the incremental risk weights. So 25% increase we have seen. And because of this, the cost of funding for the NBFCs actually will be higher. So fintech has an advantage because of the cost leverage. But eventually we have to see now over the period, how does it pan out? But I think Zomato definitely has done good from the profitability perspective.
Sure. Amit, the LIC, that's another one. The stock has gained nearly 10% in the last week. But the fundamental problems continue to remain the same for this one. The market share seems to be shrinking. Generous commission structure for agents is keeping the cost higher. What do you make out of the insurance companies per se, specifically life insurance?
So overall, the insurance also, had not participated at all in this rally for the last 1.5 years to couple of years, in fact. And the reason being that if you see, the claims which came immediately post pandemic, it was very high, and they were suffering because of that. And we have seen that if you see right now the valuations of these companies as per the profitability and the margins, because margins also were under pressure. I think now they have to look for the volume growth. And this is where more competitive scenario is coming up. If you see the higher premium segment, that also was, got a hit because of the tax. And that is where you saw a very prolonged period of underperformance in this space. Now, when the banking is not performing, some flows have moved into the insurance space. So overall, the BFSI, if you look at, so we have seen some exchanges have performed. And we have seen that it is possible, some demat companies can start performing. But ultimately, the insurance, which was not performing for such a long period, they saw some flows. But still, we are not gung-ho about this space. I still believe that we have to be a little choosy in the banking, and we are putting more cards in the PSU banking. Because the reason is very simple. If you see the inflows because of the Indian government bonds, which are going to be listed from June next year in the JP Morgan bond index, I think it is going to be $23 billion. And and it is not only that JP Morgan is there. Going forward, I think Bloomberg and Russell, these two indices are also there with their ETFs for the bonds. And this is where the Indian bonds can be listed. So more flows are expected going forward because of this. So the banks who are holding a higher chunk of government bond, they are going to be benefited. And you are already seeing that Indian bond yields are subdued vis-a-vis the US bond yields. US bond yields had a sharp run up before, but Indian bond yields have not taken out the May 2022 levels yet, which was 7.6%. And this is one positive goes to the PSU banks. Another thing which is coming positive for them is the start of the capex. You are seeing that some of the private companies, they are announcing capex now. And because of which the lending of the corporates, which was very low, it was hardly 6%, it is picking up now. And the average lending book of the banks is already higher, around 17-18%. And because of which the RBI came out with for the unsecured lending, the kind of risk weights increase, but the corporate is still low. And PSUs are more linked with the PSU banks are more linked with the corporate lending, and this is where they will have a good run up. I think once this consolidation period goes off, and we are going forward, we are quite bullish in this space.
Amit, which are the PSU names that as a fund house that you've added to your portfolio?
So we have positions in Bank of Baroda and SBI in our ACE equity portfolio. And in fact, in the recent declines also, we have added the positions. And we believe that going forward, because one leg of profitability surge we have already seen, and the NPAs are low. And I think the next surge is going to happen once this consolidation post the NIMs not being expanding happening right now. But post that, you will see another leg of credit surge in Indian markets because of this corporate cycle picking up, and that will lead to the move in the PSU banks.
Well taken, especially because there was some amount of concerns around that NIM compression for the last 2 to 3 quarters or so, thereabouts. But let's also talk about your view at this point of time. Which are the sectors in the run-up of course, election? And it is, we're approaching the end of the year now. FIIs will start selling, or there will be a bit of a lackluster trend, which usually has played out thus far. Which are the pockets at this point of time you think could be attractive bet for the year 2024 for that matter? Themes, do you think railways, defense or capital goods will still continue to be the driver, just the way you see ahead of election?
So our sense is whether it's election year or non-election year, but the kind of reforms which have already happened, I think two sectors are clearly the winning propositions now. One is power, the other is telecom, because in both the spaces you are seeing the surge in the tariff rates now, which was not happening before. So if you see, the main problem in power was the state electricity boards were in deep losses actually before, because they were not able to increase the tariffs, and also they were not able to reduce the theft because in the power in the tier 2 and tier 3 cities. Now we have seen that smart meters are coming up very, very aggressively. In fact, there was a Singapore state company which has taken a stake in Genus Power, which was in smart meters. And then we saw that now the whole power demand in India is increasing. It is increasing because the government push towards Make in India is demanding more power. So the peak power demand, which used to be 220 gigawatt, it has gone above 240 gigawatt now. And there is a demand compounding happening in excess of 8%, which used to be around 2 to 3% before. And this is where the government has allowed for thermal power expansion. The government is obviously looking for renewable as another source. They have also allowed some sort of import in the coal also, and the coal prices are lower, which is also coming to the benefit of the power companies. So power is one space which we believe is definitely picking up. So, and that one needs to look at. Other is telecom. I think telecom, the tariffs are increasing now. The lower prepaid cards are getting scrapped. The previous focus on a subscriber base is moving into the average revenue per users now. You have clearly seen Bharti ARPUs moving beyond 200. In fact, it is better than Jio. And the subscriber base also is ticking in, because we have seen that in Vodafone, the subscriber loss has continued. So these companies are coming into profitability. Their free cash flow, if you look at in Bharti, it has come around 1900 crores, despite 8,000 crores being paid to the spectrum users. So going forward, we are expecting almost 400 billion rupees of free cash flows in the coming 2 years from this company, which I think is definitely positive. And you have seen that despite market coming down by 1,000 points, Bharti Airtel actually was going higher. So this is a positive which is coming in both of these spaces, and I think they will keep on ticking going forward.
Well, I also wanted to chat with you, apart from the themes that you've discussed, of course, power, PSU Bank, telecom, exchange stocks, specifically BSE, which seems to have done well. Of course, Jefferies has also come up with an initiation report talking about the exchange benefiting from the the overall rising equity participation from digitalization of capital markets, which seems to be a big positive for this one. They're expecting 150% earning jump in FY24, and the derivative market share too is expected to jump in. What do you make out of it, BSE and the other exchange-related stocks?
So exchange related, definitely, because corporate governance issues are very minimal, it is a good bet, but the valuations also are higher. We have already seen in the unlisted space, NSE prices have gone higher. It was not able to list, and we have seen the BSE got a benefit of that. So the derivatives could be one of the edge of this, but we have to see going forward how does it pan out in BSE from the derivatives perspective. But yes, as the market is getting broad and you have many mid and small caps being listed in BSE, that is also one of the reasons the cash volumes are improving there. I think the valuation is also one of the factors which may restrict the move in the exchanges, at least in the near term. But once you are talking about exchanges, I think Indian Energy Exchange is one company which had fallen actually significantly before. And now I feel the valuations are very lucrative in this particular company. So it is possible that you will start seeing some flows moving into this. And as I said, the power demand is increasing. The power trading on the exchanges can also improve going forward, and that can lead to a good volume surge in this particular company. So it may be consolidating for some time, but yes, as per the valuations, it is much better placed than the other players from the exchanges front.
Sure, Amit. We're just going to leave it at that. And thank you for taking out the time and having a conversation with us.
Yeah, thanks.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of the screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.